good afternoon or good morning, everybody. I'm Andrew Lambert with Cross River Bank. I'd like to welcome you to the webinar Galileo's Evolution into Banking Technology, Lending and Credit with my special guest, Scott Johnson. He's Vice President of Revenue at Galileo. And Scott, why don't you give us a quick intro before we dive in?
Yeah, well, Andrew, first and foremost, thank you very much for having me on today. I'm excited to go through this and looking forward to our discussion. So, thank you very much for the invite, and excited to have our discussion today.
The pleasure is ours. I tell you what, why don't give us a little bit of your history, Scott? How you landed at Galileo, maybe how long you've been there, and what your current role, a little bit more color on your current role.
Yeah, no, happy to do it. So, I hate to say it, but I'm going to date myself. I've actually been in the payments industry for almost 30 years, so it's been a long time. I actually started my career at American Express, and to show you how long I've been doing this, when I graduated from college and got into this, we were trying at the time to figure out how to make a traveler's check electronic. Now, there's probably a lot of people that might be listening in that are saying, what's a traveler's check? Well, what is that? I mean, what do you mean? I mean, that was trying to figure out like how to make a paper instrument electronic. So that's really where
I'm old enough to actually use traveler's checks,
there you go,
so
Andrew.
there
You
you
would be
go. Yeah,
both. You actually like might even have a few lying around in the basement,
possible.
right? So, but that's where I really started my career was with Amex, and was there for a little bit. I was then spent a little bit of time working for GE here in where I'm located in Salt Lake City, Utah. They have an ILC charter here, and it was part of then GE Capital. But I started, if you can believe this, with Galileo. It'll be 20 years next month. So going on a 20-year anniversary at Galileo. It's pretty
Congratulations.
rare, right, Andrew, in the
Yeah,
tech space to be at one company for that long, but it's going on about 20 years. And so it's been really, really amazing to see, the journey to going from startup. I was like the 20th or 25th employee-ish to where we are now. And like you said, my role is as the vice president of revenue. So what that really means is I'm in charge of bringing in all new revenue in North America. And that's in all sorts of different types of products and services that we offer with our B2C products, our B2B products. I'll talk a little bit today about some of the things we do on the banking, core modernization side. So all of that, all of those areas really kind of roll up to me here at Galileo.
excellent. Well, congratulations again on hitting almost 20 years. That's a huge accomplishment in any industry, but in fintech, pretty remarkable. You mentioned a little bit just now about, Galileo, and you do kind of a little bit of everything in the technology space on the processing side and on the fintech side. But maybe break us down a little bit, kind of the kinds of products that Galileo supports, and the kind of customers that you have.
Yeah, happy to do it. So let me give you a little bit about kind of the history of Galileo as well. I think it's always interesting to see kind of how companies end up doing what they do. But yeah, we've been in business now for about 22, 23 years. We're located here headquartered in Salt Lake City, Utah. We kind of grew up in what I'll call the traditional like prepaid processing space. And we did that for a long time as a Visa and MasterCard and Discover Card kind of endpoint. And what was really interesting and where our company, started to evolve quite a bit, Andrew, is I'd have to go back and look. It was probably like 2012 or 2013. We made this big leap into publishing our APIs. Now, today in 2024, that's pretty straightforward. If you're a technology company, you have a suite of APIs or a set of APIs. Well, I'll tell you, 12, 13 years ago, that was pretty novel stuff. And what was so interesting about it, as you think about kind of Galileo and where we've traditionally played and where we grew, when we published our APIs, that was a really revolutionary event for us, because now all of a sudden we had different fintechs that started coming to us and saying, hey, we could run this type of construct on your platform or this other type of construct. And it's one of the reasons why, we really think of ourselves as the AWS of fintech, where you can run all sorts of different types of use cases and constructs on our platform, because we are an API driven platform first. And so where we really grew up is, once that happened, we really rode this wave of kind of neo challenger banking. If you go back into like 2013, 2014, 2015, when that was really taking off, we made a strategic decision to really play in that space. And we were fortunate to partner with lots of different companies that were just on the very cusp of this, of now being able to take, these great, devices that we have all day in our, all day, and really build mobile banking applications that would run on Galileo underneath all of that. So they had built these amazing user interfaces and mobile apps, and we were powering all of that. And that's really where we've spent our time up until about, kind of 5, 6 years ago. A couple of key things have happened. We've really kind of grown now into, instead of just really focusing on B2C, we're now really focused on B2B, both for debit, prepaid, and credit type of constructs. And the other thing that's been really interesting with our company, we were acquired in 2020. I can't believe it. It's been 4 years this month that SoFi acquired Galileo. Again, as time flies when you're having fun, I guess, but it's been 4 years that we've now been part of a publicly traded company with Technisys. And then about a year and a half after SoFi acquired Galileo, they also acquired a company called Technisys. Technisys is now part of SoFi Tech Platforms and Galileo, and they're a modern banking core. So that's been a really, really fun part of the business also, Andrew, to get into, which is really looking at trying to help banks modernize their cores. And that's another kind of part of our business that's been very interesting to look at, because as we joke a lot, I grew up in the 70s. I love the 70s. I love the music from the 70s. I just don't know that I want my bank to have their core technology from the 70s. Like 8-track players were great, but I kind of like Spotify a little bit better. So yes,
Yeah,
we focus on.
yeah. Yeah, absolutely. I think there's some really interesting synergies between the way Galileo's processing platform engine and sort of the constellation of services around it could play with an open banking platform or a modern banking platform like Technisys. How do you, without divulging trade secrets or anything, but
Yeah.
how do you guys think about leveraging those two components to maybe you know do new and interesting things for your partners?
Absolutely. It's been really interesting as we start to play in this, Andrew, is kind of seeing this blending of where payments are kind of over here and you've got banking over here, and now starting to see where these these lines start to blur, they get a little bit gray. And I think that one of the things that gets us so excited about it is I think sometimes some banks have been a little handcuffed because they just can't be incredibly innovative because they're just running on some older technology. And you can do some things, but you can't do some of the really cool creative things that it's so easy that I think that our platform on the payment side enables. So we're really starting to try, Andrew, it's kind of one of our core strategic initiatives, is really trying to blend these two areas together so that we can enable banks to have more creative solutions in a very
Hmm.
compliant way. I know we're going to talk about that, but we're going to try and do that. But
A
then
little of
also
that, yeah,
from the payment perspective to be like, yeah, well, we can take that expertise and layer it in. So we're just trying to really blend the two, and you can get the
yeah,
best of both worlds within our company and our platform.
yeah. Super interesting. Yeah, I think having been in the industry for a couple of decades, also the legacy, for lack of a better term, kind of COBOL based bank cores, like they're still out there. There's a reason why people still need COBOL software developers, and it just makes your life really, really interesting when you try to do new and modern and interesting things on a platform like that.
You're absolutely right, Andrew. I'll tell a quick story. And I know you and I were at the same conference last week. So it was not at this conference. It was a couple of years ago. So I'll protect the names of the innocent. I was talking to a really pretty good sized bank, and they really opened up about some of their IT challenges. And one of the things they said along the lines on the Cobalt side, they said, listen, we have 6 people left at the bank that know how to code Cobalt. They're in their late 60s, early 70s, kind of hold the bank hostage as far as here's my hourly rate to go and do some of those fixes. So I think
Yeah,
that they're by no means unique in that.
yeah.
And there's definitely just a lot of legacy tech debt that is eventually going to need to be updated. And that's really kind of core to the thesis of why we're so excited about our modern banking core.
That's so cool. Kind of related to that, we've talked a little bit about payment processing, a little bit about core banking, but when we think about, especially in the early days of prepaid, but even now in the context of debit and credit, there are so many other services that sort of have to wrap around
Yeah.
those core technology capabilities. People talk about program management, they talk about processing plus type services or program management minus type services. And I guess I'd love to hear your take on number one, how do you define or how do you consider program management, and where does Galileo and your sort of suite of offerings, straddle some of those different services?
Yeah, no, it's a great question. One of the things, Andrew, is kind of a joke I always say is, I think you could get 10 experts from the industry and say, can you define exactly what a program manager does? And I think you're going to get 10 slightly different definitions of it,
At
because
least 10, maybe
at
maybe
least
more
you
than
might
10.
get,
Yeah.
well, and then in this scenario, it's this. So it is a very complex, and people view it differently. So I'll tell you how we traditionally think, at least on the Galileo side, like how we think about program management, where we fit as a processor versus, some of the terms around BAS and some of those things. So when we think of a program manager, we traditionally are going to say the program manager is the company that is typically, marketing a card program, right? They're the ones who are traditionally having that experience. They're the ones focusing on their customer acquisition and their customer acquisition cost. And it's one of the reasons why we've built the suite of APIs is to enable program managers to go out and do what they do best, building beautiful front ends, having this process for acquiring cardholders and doing all of that, and having, as we know, a direct relationship. This is one of the things that, with most of our use cases, Galileo acts as a processor only. They'll have a direct relationship with, a sponsor, as you know, with somebody great like Cross River. So that's really kind of the model that we think about as far as, where a program manager fits. Now, one of the things that we view is to say, then what services? So we have a very detailed analysis on this. Imagine, like, here's the spreadsheet or whatever it is with all these rows of roles and responsibilities. And it's literally like, here's what the program manager does. Here's what Galileo as a processor does. Here's what the issuer does. Here's maybe if there's another entity involved that might be doing. And we're able to be very flexible in the kind of roles and responsibilities. But typically, we're going to be providing a lot of the core services, not just auth clearing and settling of transactions
Hmm.
as a processor, right? But then we're also taking a lot of the roles of chargebacks and disputes and fraud mitigation and monitoring and those types of things. So there's lots of these services that we offer. I think, to your question, also about kind of where do people fit as far as we think around, kind of BAS or like processor plus and kind of some of those things. I think that the BAS model has typically been the way we think about it. They're kind of taking maybe a little bit more of that blended role of a platform and program manager together. So we do act in some situations. We will absolutely act as a program manager. We can talk a little bit about where we are a processor only and a program manager. But I think that traditionally a BAS is kind of taking on a little bit more of the program management aspect within their companies.
Yeah, that sounds right. And I think I may have a spreadsheet at my desk that probably looks a lot like the one you just referred to in terms of the services that everybody does.
Right, exactly. And if you don't have that playbook, that's where I think it can get very challenging because where we and listen, we have learned, with all the programs we've launched, sometimes you kind of learn the hard way. It's like, hey, I thought this company was doing this, but over here they had like the different checkbox. So it's got to be very, very clear where those roles and responsibilities lie on these programs.
Yeah, definitely. And I think, the ecosystem's changing a lot. You mentioned a couple of minutes ago about some, regulatory scrutiny that's happening in the industry. And I think, you know, my opinion anyway, I think some of those roles are adjusting based on that scrutiny. But what are you seeing and kind of what's your take on what's happening in the market right now?
Yeah. It's interesting on the regulatory side. And I think that if you go back, as I was talking a little bit about Galileo's history and kind of where we fit in the ecosystem, when we were acquired in 2020 by SoFi, they didn't have a bank charter at the time. They've now since got a bank charter. And it's really focused on, SoFi does a lot of lending, student loan refinancing. That's really kind of their core business. What's been so interesting, Andrew, as you kind of think about regulatory, our view of it has certainly changed as we're part of a bank holding company now. So ultimately, the Federal Reserve can cascade through, SoFi Bank Holding Company to any part of that, and that includes Galileo. It's been, I've always felt like Galileo was on the forefront of a couple of different areas. One example is, I always think like 7, 8 years ago, people would always kind of say, Galileo, you're just darn right paranoid about data security and being hacked into an infosec and those things. We're like, absolutely, we are. It's interesting that now we don't ever get that question. Right now, it's like, oh my gosh, you think of all these data breaches. Well, I think about what we've
Yeah.
tried to do on the compliance side to be very much on the, I don't want to say the cutting edge, but always, making sure that everything that we do is compliant, that it's defined, that we're operating underneath, what the bank, the issuing partner is telling us, et cetera, and following all the rules and regulations for all the programs. But I think that now, as being part of a bank holding company, we take again that extra view that we have to in building out our first line of defense and everything. So I think that's one of the reasons why, as we look at some of the changes going on in the marketplace, one of our real benefits, I think, is being part of that. Our goal is we have to be, compliant first. And I think that that's one of the kind of the benefits, because I do think, Andrew, like I think you mentioned earlier, you're going to continue to see some changes of kind of roles and responsibilities in the marketplace, I think.
Yeah, I mean, one of the questions that we got from the audience as they were registering was around shift in banking tech, lending, and credit. You know, is that, I guess, what's your opinion on what that does to sort of the middleware providers that exist today? And I think, maybe in a minute we'll get to a topic that I think you can't talk to a fintech person without touching or at
Sure.
least over the last few weeks.
Yeah. Yeah, no, absolutely. And I think that you're, as you look at, some of those questions on how things are changing the marketplace with lending and credit and some of those areas, it is interesting. The marketplace is changing. It's changed in a lot of ways over the last kind of 4 or 5 years in all sorts of different aspects. I think, and we'll spend a little bit of time, talking about, a rising interest rate environment versus when interest rates were at zero.
Yeah.
Like just one example on that, just where you see like where that's changes on lending. It used to be when we would talk to prospects or our customers that they would come up with a lot of use cases that work really well in a zero interest rate environment that maybe now with, I don't know, what was Fed funds at 5.5, it doesn't work as well.
Yeah.
Float, oftentimes in interest on savings accounts wasn't even really talked about. Now it's a big deal. So
Yeah.
that's one of the things we've definitely seen kind of changing over the last, the last little bit, is certainly how much models and P&Ls, et cetera, have had to change given that the fluctuation in interest rates.
I think, just to take a quick tangent, I think on that same topic, you've also seen funding on emerging fintechs change dramatically now that we're not necessarily operating in a zero interest rate
Yeah.
environment. And how do you guys, especially on the revenue side at Galileo, how do you guys think about navigating that challenge with especially very early stage startups?
No question about it. This has been a real interesting phenomenon over the last number of years. So if you go back, I think to kind of, pre-COVID, timeframes, call it 2018, 2019, I mean, the first part of 2020, the term I like to use is it was getting a little frothy, right? I don't know if that's a great word, but it's kind of a fun word to be like,
Sure.
there was an unbelievable amount of investment coming into the fintech space, right? And we were starting to get to where I think there was just money was kind of coming in maybe at the later stage on some of these programs. And we were seeing, Andrew, at the time, I think a lot of, Me Too types of products out there. And there was a
Mm,
lot of money flowing in. I think what we've seen, lately, especially over the last 18 to 20, 24 months, again, with interest rates coming up, fintech investment has come down. Listen, it is not dropped off a cliff. I want to be really clear. This is
yeah.
not like, oh my gosh, there's no more. There is absolutely a lot of investment still coming into fintech. I think we're seeing a lot more focus on investment that's coming in a couple of different areas. I think number one, a lot more rigor around, is this company going to be a profitable business? Where I think that we kind of lost sight of that. Again, I'm going to kind of date myself a little bit, but that was kind of the dot-com boom. 20 years ago, it was like, well, just focus on revenue. I don't even care if you ever become profitable. I think we had a little bit of that.
Mm,
It's now kind of come back down to reality, at least what we're seeing. And so what we've done on our side to kind of address all of this is, yeah, we are pivoting to where we're taking probably less swings at the plate on kind of a smaller startup. Now, listen, if somebody's got a great idea and a great concept and they've got something there, by all means, we want to talk to them and partner with them. But we are kind of looking more at more established businesses, people that have existing customer bases, those types of things that maybe have a little bit better chance to make it through kind of the ups and downs of getting a product to market and then being successfully be able to manage that business going forward. So that's kind of some of the areas that we've pivoted as we've seen some of that fintech investment come down.
Yeah, and I think, the attitude here is similar where, like you said, if somebody has a really great value proposition or something super interesting that they're doing, then absolutely, like we'll engage in a meaningful way. And yeah, exactly. I think I'm hearing that in a couple of different couple of different ways.
Yeah. Yeah,
Um,
absolutely. Yeah.
just to maybe take a quick pivot to again kind of regulatory
Yeah.
related. I think the elephant in most fintech rooms that I mentioned earlier is sort of the ongoing and very visible fallout between Synapse and Evolve Bank and Trust and their fintech partners. And I'd love to hear kind of your maybe market perspective as a dispassionate, let's say, observer
Right.
on that.
Yeah, no, Andrew, you're absolutely right. It is one of those that it's hard to have a conversation right now without that coming up. Usually, about 6 weeks ago, it was always about AI. So now, it's
Yeah.
a new topic. But it is something that I think, unfortunately, is going to give the industry a little bit of a black eye. I think that to think that there isn't going to be some type of negative fallout that is going to come from this is probably not going to be the case. I think we are going to see a little bit of a black eye. I will say is kind of the ways that we have looked at this. And again, it all is very public and everyone can kind of follow what's going on there. What we try and emphasize with our prospects and our customers is maybe taking a little bit of a step back and say, one of the key things to always remember is at the end of the day, who are you partnering with for these types of programs? These are financial service products. These are regulated products, as you know, better than anyone on the issuing side. These are so looking at these and saying, listen, as a core technology provider, how are you going to get comfortable from a due diligence perspective and working with someone that ultimately is your ledger, your system of record, your processor, the company moving the money around, all of those different
Mhm.
things that we do. And I think that that's why, as we look at this, I think that we feel very good about how we're positioned in the marketplace as being part of a publicly traded company, right? We feel very good as people saying, let's look at a company like Galileo. You can get very comfortable with who they are, what we do, et cetera. I do think, again, there was the article, is this the FTX moment for fintech? I don't agree with that. I think that what you're going to find here is coming out of this. Listen, this is going to be a black eye for the industry. I don't want to say this is just going to get, I think this is going to be a black eye. What I will say, I think this is an opportunity for the companies and the players that were strong before and doing things the right way. They're going to be strong and doing things the right way coming out of this. And I think it gives everyone a good time to kind of take a step back, reflect on the way that they approach their partners and how they think about it. And then hopefully kind of coming out of this, the industry will just be a better place. And again, that people can get very, very comfortable with it, because what we want to avoid at all costs is, again, you see some of the things, the end consumer that is ultimately hurt by some of these situations, that has to be avoided. And that's again something that I think, again, the industry is going to have their day of reckoning with this, but we'll continue to move forward.
Thanks so much, Scott. Appreciate the take on that one.
Yeah.
You did mention AI, and to your point, I don't think I've been to a conference this year where AI or large language modeling or something along those lines hasn't been mentioned. And so I'd love to hear your opinion on emerging tech, whether, eh, artificial intelligence, open banking, kind of how that sort of factors in, maybe to how Galileo are thinking about your role in the ecosystem, or how does that affect, your conversations with your partners?
Yeah, so I'll answer it maybe a couple of different ways. One of the things that we've always prided ourselves as a business is being super innovative, and being able to be on that forefront of changes. One of the things I know, Andrew, you and I were at the Visa conference last week, and they talked about one of the really cool product offerings that they mentioned was that new Flex Pay credential, where you
Yeah.
can like one Visa credential that allows for a debit card transaction. You can almost toggle on your phone to like be able to do a buy now, pay later, and then a credit transaction. That's some really cool stuff. Well,
Hmm.
what we pride ourselves on is being able to say, listen, how do we enable and be on the forefront of that? And a lot of that comes down to, as we think about what's going to be coming down the pipeline, is to think about, our platform is very is constructed in a way that's very easy to adapt, make changes. Our code base is very easy to work with on that side, to be able to work with these type of scenarios. And especially because, there's these new kind of product enhancements that happen all the time. It's kind of core to our thesis of being, the best of breed, platform, again, that's AWS of fintech, to try and be
Mhm.
able to support those areas. And I think the area that we've invested in, substantially, Andrew, on the other part, is in AI and machine learning, right? I mean, you can't have a conversation without thinking about that, or chat GPT, or whatever the topic is. One area where we've had really good success with it, and have for the last, number of years, is in our payment risk platform. So it is an AI driven machine learning, risk prevention product, so that our machine learning aspect of this has really helped programs decrease their fraud loss. So, if you're running a program without having the right, machine learning AI component, as transactions come in, you might have 8, 9, 10, 11, 12 basis points of loss. We found where if you implement our payment risk platform in conjunction with, having the right KYC and KYB process up front, like, let's not kid
Yep.
ourselves. We can't solve everything on the back end. I mean, it's got to be multi-layered as you think about, risk and fraud prevention mitigation. But we've had really good success in building the right modeling, and then just watching how machine learning at its best in AI. That is a phenomenal use case for it, is what we can do as far as fraud prevention. And then it's just cost savings. And it's not only like preventing the fraudulent transaction from happening, but now the person's not calling and picking up the phone or submitting a dispute. So you're not taking the customer service costs. Your chargeback and dispute volume goes
Hmm.
down because you're preventing it up front. It's just the right way to do things. And so it's one of the areas where we're continuing to really invest in our AI and machine learning.
That's great. I think, well, one of the other talking points from last week was using AI, in addition to finding fraudulent transactions as they happen. How do you use AI to find a synthetic ID that's trying to pass KYC, right? So how do you find the fraudster up front, in that scenario? So yeah, it's pretty interesting.
It really is, Andrew. That was that one session, again, where they were talking about, it was that crazy use case where they had like synthetic IDs, but then they'd spoofed like AI images of a Zoom call.
Oh
Like,
yeah.
it's really is Scott Johnson. I promise, I'm not an AI image right now, but maybe I should like punch myself or something. But where they spoofed it into like a hack in the tens of millions of dollars, because a person was like, "Well, I'm on a Zoom with someone who literally looked like my CFO." I mean, it
Looks
was
like a person, right?
looked like a person. And not only that, like, my CFO is like, "Yeah, go wire $18 million to this account," type of thing. I mean, it's scary. I mean, it's like watching, whatever, tech, Star Trek in the future, where you're like, is this really happening? Yes. So it's some scary stuff. So I think that that's the other use of it. It's just, I think, and that's a lot of where I think this is going to go, is more and more technology preventing, the synthetic IDs from happening. It's absolutely where this battle is migrating to.
For sure. We spent a lot of time talking about, debit and prepaid use cases, and for a lot of us, that's how the industry kind of grew up. But we're seeing more and more credit happen outside of let's say the big banks, and on from that perspective, Scott, how did Galileo think about partners on the credit card side, where the constellation of services that you need to run a credit card program actually is quite different, and
Yeah.
and really incremental to what you need on a debit or a prepaid program.
Yeah, no question about it. And it's an area where, and you touched on it, where we really try and think about this from a few different lenses. One, there's lots of different credit products, right? And again, crossover is one of the things that I always appreciate, is, the speciality of the bank in these areas. And we really think about it from a few different lenses. Number one, we think about, different types of secured credit products. We think about, buy now, pay later. Again, we saw the announcement from the CFPB this morning on that. I don't think that was a
Just, yeah,
surprise, but
timely.
it's kind of like, well, it finally happened, uh,
Yeah.
on that side, about, being regulated now as a credit card product. You think of those type of programs, you think of, revolving card programs. These do require, again, as we think about it, um, a lot more level of partnership in
Mhm.
bringing these programs to market, right? And it's in a lot of different areas, whether we're talking about having the right KYB, KYC provider, which, you have to have on any program. But then you think about bringing in, who's the right way of thinking about, origination and underwriting, and who's actually the balance sheet, and bringing, the actual money to the table, and these types of things. It is definitely, as we think about credit, our approach to the market is, we have got an incredible, set of capabilities on the Galileo platform. Where we need to enhance or add to capabilities. There are phenomenal best of breed players in the marketplace that have a lot of experience that we bring to the table to support where Galileo, can support being, a great platform to support credit transactions, and then subsidizing or helping with other partners that bring kind of that whole suite to the table, because it is definitely a layered approach when you start talking about those type of programs.
Yeah, for sure. Well, listen, we've got about 10 minutes to go, and we have a couple more questions from that were submitted during the registration process I want to try to cover. So we're going to go a little bit rapid fire here
Sure.
and not
Happy to do
quite
it.
be as organic, but here we go. So what form of lending for SMBs do you see as the most prevalent in the future?
Yeah, so I think a couple of things on the SMB side going forward. I think one of the things that we see is kind of unique is on companies that have visibility into the actual workings of an SMB. So it's not a novel concept of lending on receivables, but we continue to see kind of more unique use cases there. So I think that that's one of the areas that you're gonna see more of those type of things. Also, where a company has a relationship already with that SMB and is maybe trying to, sell more products in a marketplace or whatever it is. We're seeing a lot more focus on that, because I do think is, again, the world according to Scott Johnson. I think we're seeing, some of those SMBs in a rising interest rate environment having a more difficult time getting access to credit. So I
Mhm.
think that that's where we're going to start seeing this. I think that's always been kind of, I think, an underserved part of the marketplace. And I think you're going to see more kind of creative ideas where companies have that relationship. They can get a little bit closer to the business, have good visibility to what's going on. That's where we're going to continue to see it.
Yeah, definitely. Um, from an early stage company perspective, a lot of times, they're looking for access to faster payment rails, so that they can serve their members or their customers better. What do you see as the best way for an early stage company to get access there?
Yeah, faster payment rails, real-time payments, FedNow, kind of all these areas. It's a very interesting question, by the way. Um, I think the thing that you look at, I'll answer maybe a little broadly, and then I'll kind of come back. Again, I don't want to be like, oh, I know you and I are again at that conference. I think, Oliver Jenkyn at Visa talks a little bit about this.
Yeah.
Certain areas of the world where real-time payments has had just rapid adoption. Like, you can imagine an ecosystem in a country that has 5 or 6 kind of core banks, and that's it. Wow, real-time payments is like, that's a lot easier to implement than in a fragmented,
Mhm.
5,000 or 6,000 banks, however many we have in the US. And I think if I was an early stage company, what I would do is I would look at this and I would say, listen, what is the problem I'm really trying to solve? Because I think that that's one of the things as far as getting access to, real-time payment networks. I think there's very specific use cases for real-time payments. I think there's great B2B use cases for real-time payments. Some people, I think, they'll ask occasionally, well, what do I think about this or that? I don't think I'm going to buy my groceries using a real-time payment anytime soon, right? I mean, Visa, MasterCard, Discover, tapping it at the point of sale.
Well, I
That's
mean, I was going to say you sort of do, because if you use your debit card, that is, you know,
right. That is a real-time
that
payment.
is
So
a real-time payment.
that's exactly right. So that's why I think, Andrew, to your point, it's like, as you look at this, yes. So I think that there's definitely some areas where very specific use cases. I think then you'll get banks companies that will lean in at even as early stage, say, I'm solving a problem in the B2B space, and I need access to that. That's what I would recommend.
Well, I will say, as a product guy, you made my heart happy when you said, it depends on the problem you're trying to solve. That is my go-to question for
Right.
almost anything. So thank
Right.
you.
Right. Exactly. I wasn't even. We didn't even practice that. I promise. That's just
No,
that.
but listen, if you might have a future in product if you decide that sales
There
isn't
you go.
isn't up your
There you
alley
go.
anymore. So there
What's
you
the
go.
problem?
Um, let's see. I'm just scanning through the last couple of
Yeah, sure.
questions. Oh yeah, this is an interesting one. So sort of related to what we were talking about on the lending side, but with the shift to banking tech lending and credit, do you think prepaid will still be relevant? And I think that's such an interesting
Yeah.
kind of take on what's happening in the market.
I love it. Yeah, these are some great questions that were submitted, by the way. So, when I think about prepaid, and again, it's kind of the area that Galileo grew up in. So maybe prepaid is near and dear to my heart that way. But I think the demise of prepaid, has been drastically exaggerated. I don't think, to paraphrase the quote, I don't think it's fully going away, right? I think that there are definitely situations and use cases, I should say, where credit and forms of credit are going to continue to grow. I think we're going to see again the use of those type of products more. And I think that it's very clear is some companies, again, if I take like a neo challenger view of it, yeah, they're going to be struggled to find profitability using debit interchange. So there are definitely ways that we
Hmm.
think that I see, more and more credit products happening. But I will say use cases for payments in a good funds model, prepaid, debit, however you want to think about it. There are lots and lots and lots of use cases still with that. So is there going to be a shift? Yeah, I do think there's going to be a shift. I think again, there's these trends with higher interest rate environments versus low interest rate environments, et cetera. But I don't ever see prepaid going away. There's just too many use cases that need to be solved for doing that. So yes, I think you'll see some shifting more and more to credit, but I don't see prepaid going away. No.
Enthusiastic agreement from this side of the screen, I think. Um, I think we've hit our questions, but I want to give you, if there's something that we weren't able to cover or a topic maybe that you definitely wanted to talk about, let's hit that now. And we'll see where it takes us.
Yeah, sure. I'll just kind of throw maybe one out that's interesting. And it's probably more, from a Galileo side. One of the things that's really interesting is, again, we're headquartered here in Salt Lake City, but we've got offices in Mexico City. We've got Technisys, the company that SoFi acquired, that's now part of Galileo. It's headquartered in Buenos Aires, Argentina. It's been really interesting, Andrew, to see over the last kind of 4 or 5 years, just the growth of payments in
Mm.
Latin and South America. The electronification of payments is what I should really say. And how many people, prior to COVID, had access to a mobile banking account versus post. Now, we saw that number grow in the US, but the numbers in Latin and South America have been really, really interesting. And it's an area where, again, as we think about, our business, it's an area that's really just continuing to grow, and certainly different markets, whether it's Mexico, Colombia, or Argentina, Brazil. Although it's in South America, I like to think of Brazil almost like its own continent because it's like 200 something plus million people. Unbelievable opportunities in these areas. We're seeing lots and lots of fintech continuing to grow in those areas. So it's going to be an area where we continue to focus. So Andrew, if you ever get an issuing charter in one of those countries, let us know. But it is there where we're continuing to see a lot of growth.
It's a super interesting market. I think the experience or I'd say the Pix activity out of Brazil
Right.
in the last couple of months even has been just astonishing. So yeah, I think that market in particular is super interesting, and we'll keep that in mind if we decide to extend out to the US. We know we've got a trusted partner in market to work with. So that's fantastic. And I wanted to say thank you. From a Cross River perspective, we really value the strategic partnership that we have with Galileo team and yourself in particular, Scott. And thanks for spending so much time with us this morning or afternoon. This was a blast. I had a great time.
I did too, Andrew. And again, thank you very much. And again, just to reciprocate, we really appreciate our partnership. Again, like I've talked about in this, the Crossover's expertise, experience in the credit space. I mean, there's just not a lot of folks out there that can do it like you guys do. So again, I'm always happy to jump on. I really appreciated the time to be here, and always good to catch up.
Awesome. Thank you, Scott. We'll run into each other at some point soon, I'm sure.
Absolutely, I'm sure. Yeah, thanks again for having me on.
Okay. Thank you, everybody. Appreciate your listening and see you again soon.